Welcome, everyone, and thank you for joining us today for our very first live virtual investor What This Means segment. My name is Janine Thomas. I am CEO of JTCIR, and I will be the moderator. I am very pleased to be joined by Mark Laverghetta. He is Executive Vice President of American Resources and co-founder and director of its wholly owned subsidiary, ReElement Technologies. We also have with us Kevin Smith. He is non-executive director of Iris Metals. Welcome, gentlemen.
Good afternoon, Janine. Good to be with you.
Hey, Janine.
So happy to have you both. Before we get started, I just want to remind our audience that American Resources is publicly listed and trades on NASDAQ under the ticker AREC, and Iris Metals is publicly listed on the Australian Stock Exchange under the ticker IR1. And during our discussion, the companies will be making forward-looking statements, and I encourage everyone to view their company websites at AmericanResourcesCorp.com and IrisMetals.com for the latest information. So, gentlemen, we're going to dive right in, but to set the stage for our audience today, I'd love for each of you to provide an overview. So we'd like an overview of American Resources, corporations, ReElement Technologies, as well as Iris Metals. So Mark, we'll start with you.
Great. Thanks. Great being here again. ReElement Technologies, it's a multi-mineral, multi-feedstock platform technology for cost-effective critical mineral refining. We started this venture probably now about 8 years ago as a way to reduce costs or potentially monetize some of the waste streams we were seeing that were coming out of our mining division, which is American Infrastructure. Coming out of the commodity industry, approaching it from a commodity-focused background, we approached ReElement, and the specific challenges that came with it, with understanding at the end of the day, costs mattered. That specifically really put us at the right place and at the right time to look at the critical mineral landscape in a way that was unique and differentiated from the majority of participants that were entering the supply chain and continue to enter the supply chain. We were focused on what we believe is the most complex part of the supply chain in that midstream processing and refining step, specific to ReElement, that separation and purification stage. Which has also afforded, China to centralize the critical mineral supply chain of manufacturing grade critical minerals to a single source monopolistic economy. Another point is where others were mostly looking at focusing on sourcing material through either mining, extraction, or aggregation of recycled feedstocks. We set out to solve that midstream challenges through innovation. And by commercializing specific technology that was developed out of our partner, Purdue University, to continue to be a great partner of ours, which can address the needs of the critical mineral supply chain in a cost-effective and environmentally safe way. And that's what ReElement has accomplished in commercializing this breakthrough technology that can efficiently be deployed outside of China to produce ultra-pure critical mineral products at scale that are cost competitive, if not at a lower cost, and gives us the ability to synthesize and catalyze a more healthy supply chain of critical mineral inputs that go into all things technology today. Lastly, by addressing the midstream challenges, we're able to collaborate with upstream partners like Iris Metals and downstream customers like cathode or battery manufacturers or magnet manufacturers to really bring that supply chain together here domestically. ReElement Technologies as a platform is set up to displace or replace legacy refining methods that utilize solvent-based or hydrometallurgical processes that are expensive, have very negative environmental impact, and therefore become very risky and unpractical to deploy outside of China. The attributes of our technology enable us to scale into the market more congruently with the availability of feedstocks and as manufacturing develops here domestically.
Great, appreciate that, Mark. Kevin, we'll go to you.
Sure, good to be with you, Janine, and audience here. So Iris Metals may be a new name for a lot of people. It's an ASX listed company, mining company, with its primary project in the US in the state of South Dakota. And it's uniquely a hard rock spodumene mining and exploration company. Our main assets are two key projects, the Beecher project and then the Tin Mountain project. These have been previously mined before in the 1950s, 60s, and 70s. The U.S. got a lot of its critical minerals during the Cold War years out of these mines, and so they've produced lithium in the past. And our brownfields restarts, already permitted, exposed mine faces, things like that, that allow us a low hurdle to restart production. And if you look across the US landscape, there's not a lot of domestic lithium production. It's essentially non-existent. And the other efforts that are out there are based around other newer technologies, such as DLE, direct lithium extraction, and other projects that involve production from clay resources and things like that. And those we see those as having challenging flow sheets to bring products to market. And uniquely with our projects, hard rock spodumene is a known production source, uses very low tech methods to bring product to market. It's essentially what's done in Western Australia at large scale right now. So we're not breaking any new ground technology to deliver units to market. And there's a unique opportunity set around this project, we believe, being in the US, being hard rock, being permitted already, gives us a great runway to bring product to market and start, moving the needle on critical mineral supply in a domestic context here.
Great, appreciate that. So the reason we are here today for this What This Means segment is you recently announced an MOU to develop domestic production of battery-grade lithium. First of all, congratulations. Could you provide an overview of that partnership?
Sure, I can start. And just to follow up on what Kevin was just saying, in some of my statements earlier is, our technology platform enables us to partner with upstream partners to bring manufacturing grade products downstream. And that's exactly what we're doing with Iris today, and what the MOU signifies for us to get into a fully commercial agreement. And a partnership with Iris, it's bringing real solutions to the market in real time and in an expedited timeline that can make real progress in the market because of what Kevin just said. Hard rock spodumene product is a proven process. We've validated their SC6 or spodumene concentrate 6% as one of the higher grades, if not the really high grade SC6 that we put through our validation process. The fact that it's already permitted, the fact that we can bring our attributes to the technology and scale along with Iris and their production plans, to bring real solutions to the domestic market quicker than what we think anybody else can do, and at a cost structure that's cheaper than anybody else. And Kevin just mentioned it too. There are other technologies and other feedstocks that are coming to market. Clay-based lithium projects, for example, they're just more complex. They require more money, more size, more time, and therefore more risk. Where a high quality spodumene hard rock that we validated through our process, bring it all the way to ultra pure battery grade lithium, we believe puts us in position to be one of the first producers of high grade battery grade lithium to the domestic marketplace, meeting IRA compliance in an expedited timeframe.
Yeah, and from the Iris side, I would add on to that we initially set out to bring spodumene concentrate to market, and that's I think a notable achievement. But a lot of the customers or potential customers we're talking to in the US were saying, hey, that's great, Iris, but I can't put spodumene into my battery. I really need a finished lithium product to really move the needle. If you deliver me this, I'm going to have to ship it somewhere for downstream processing that's typically outside of the US, potentially to China and things like that. And that kind of it doesn't move the needle, and it doesn't really start moving things in the right direction here. And so we were looking around for possible solutions to go further downstream with our product, where we might convert it into lithium, finished lithium products in the U.S. And we came across ReElement and looked at their IP, did a site visit, and they seemed to have the missing piece of the supply chain we were looking for. And so we gave them a sample of our material, which they successfully converted to battery grade lithium carbonate. And we're very pleased to see that. And so we've gone and signed an MOU around that at this point, and we're continuing some further discussions about how we might scale up that relationship to a commercial scale relationship here. But it's really unique to have this capability. It brings finished lithium units to the market. And so in that supply demand balance, critical minerals sourcing balance in the US, the combination between our two companies actually moves that needle, and it does it in the near term. This isn't a hypothetical, end of the decade sort of a timeline. This is we're talking in the near term here, where there's a supply gap that needs to be filled in.
Great. Well, you mentioned the word unique. So my next question is, and I'd love to hear from both of you, what makes this collaboration between the two of you so unique?
Yeah, well, I think, first and foremost, as Kevin mentioned, that they're stepping into, their South Dakota Beecher project, which is fully permitted. So that enables us. We're not talking about long lead times to get a new mine permitted here. We can talk about the attributes of our technology, of bringing a unique breakthrough technology to the market as well, where our commercial qualification facility in Noblesville, Indiana, we permitted it in less than 3 months. It speaks to the environmental safety of the technology. So what's really unique is they have really high grade spodumene, domestically based right here in the United States, which, layering on top of that are unique attributes of environmental safety, high throughput, high purity product, speaks to the benefits of 1 + 1 equals more than 2 here. We're able to, like Kevin said, we're able to move that needle and move it quicker. And I think that's unique to the market.
Great. Kevin, you mentioned about it's not going to take a decade with respect to timelines. What is the general timeline to get battery grade lithium to market?
Sure, we're evaluating that right now, and doing the necessary studies to clarify that more fully and specifically. But being permitted right now, we could load material this afternoon if the economics and the processing pieces are all there. And so we're looking to clarify those items here in short order. And we have gone out publicly and said that we see a production path for spodumene concentrate in the second half of 2025 from our South Dakota projects. So that's bringing battery grade, 6% spodumene concentrate onto the market in that time frame, which is significant, and it beats the majority of other projects out there that still need to build infrastructure and things like that and seek permits and approvals. We're a long way ahead of that, and then I think that dovetails fairly well with the timelines that the ReElement folks have outlined here. In a second half of 2025 timeline, there's the potential for us to be delivering finished battery grade units to market, which is significant. And I don't think many people can say that, including some big, multi-billion-dollar players in the space. Nobody can do that in a US context.
Yeah.
So exciting. Go ahead.
From our perspective too on that timeline, I mean, it does line up really well with us, and I think we've spoken publicly on our domestic growth and growth plans on how we scale our technology, both at coming out of our Noblesville commercial qualification facility, where we bring in again, we're a multi-mineral, multi-feedstock platform, so we bring in a lot of material, a lot of stuff into Noblesville. And validate it all the way from lab pilot, to small commercial scale. So we know those intrinsic operating parameters as we deploy that larger capacity in our Marion facility or East Kentucky Lithium facility, two unique brownfield redevelopment projects here in the United States to meet the needs of the supply chain quickly and efficiently and low cost, and utilizing some of the best refining methods that have ever been developed to date. It puts us on track, as Kevin said, second half of 2025 and 2026, and you kind of layer in what ReElement brings to the table on that multi-mineral, multi-feedstock platform, where it puts us on track to being, the largest producer of rare earth, of manufacturing grade rare earth elements and lithium products in that 2025-2026 timeframe.
Great. So where will the processing and conversion of lithium take place? And can you explain the importance of these aspects?
I can start. And I think it's a good segue into that topic of, as we speak of the attributes of the ReElement technology platform, is that it's modular, scalable, environmentally safe, and we have multiple projects that are going on today. We brought the Iris SC6, converted it into battery grade lithium in Noblesville. We're building out Marion as we speak, and we've closed on a $150 million tax exempt bond for the commercial build out and commissioning of our Kentucky lithium. And the attributes of the tech, quickly permittable, environmentally safe, can produce pure product, enables us to not just be a one-size-fits-all approach for any feedstock, but in particular to the Iris feedstock. We can look at it from a near-term, intermediate term, and longer term. I think we've already run product through our Noblesville facility. As we build out our Marion facility, I think it's reasonable to expect that some of that product will be run through our columns in Marion. Our Kentucky lithium project, which we're converting a conventional coal processing facility into the nation's first and largest lithium refinery, using our technology. Well, I think you could see, over the longer term or intermediate term being deployed there. And then I think as we continue to build this project out, a co-locatable facility on their site could potentially make sense as well. So it's not a one size fits all approach where other technologies, those solvent-based hydromet processes require a one size fits all approach, build and then feed. We can look at it from what makes the most beneficial sense for both parties from a cost standpoint.
So speaking of cost, how are you able to compete on cost?
Do you want me to start?
So I guess our location, I would say just on the location point there, Janine, I think the other thing that's worth mentioning here is having domestic upstream and domestic downstream, basically right next to each other here, is unique, and the reduced carbon footprint of that is also worth mentioning and notable. We're not shipping, spodumene from, if you think about the current supply chains out there, producing spodumene in Western Australia, shipping it to China to be converted into lithium carbonate or hydroxide, and then shipping that across the ocean to a battery plant in the US or Europe. The embedded carbon that gets accumulated in that is quite high. We're not going to have any of that. We're only several hundred miles away from each other. Fairly easy to integrate these with great rail connections and road connections between us. And then off the back of that, the location, proximity to end customers, kind of in the Detroit South area that's developed in the kind of Kentucky, Tennessee, Georgia, Carolinas area. There's a tremendous amount of potential customers there looking for this product that currently have no other choice except to import from overseas. So the location part is not insignificant there. And in terms of cost, we've not come out with any cost numbers from the Iris side of things, but being prior producing hard rock spodumene that's exposed at surface, it has a lot of the characteristics of low cost production that you see in peers from Western Australia that have continued to produce even through the lows of the lithium price cycle here. So that we think that bodes well for what our cost structure will be, and we have those definitive processes going on right now to determine those numbers, but we think we're going to be competitive with what we bring to market there.
Yeah, I mean, from a ReElement standpoint, we know what the cost benefits we bring in implementing our chromatographic separation within flow sheets of partners or converting it ourselves. We sit on the low end of the cost curve. We're sub $10 on the conversion into battery grade lithium carbonate. Obviously, lithium prices in the lithium cycle right now are depressed. We're still able to squeeze out a margin in the current prices, and I think you're starting to see production come offline overseas just based off of current market prices. It's probably based off of not to go into the overall outlook on the market, but I think prices probably stay depressed for a little while, but as domestic manufacturing comes online, you probably see prices start to move back up, higher in the not too distant future. But we sit in current market today. We're able to squeeze out a margin, and obviously, we don't think these prices are sustainable for too much longer.
Great. All right, gentlemen. So this is a What This Means segment. So I have to ask, what does this partnership mean for American Resources, ReElement, and Iris, as well as the U.S. lithium supply chain?
Yeah, from the Iris perspective, this partnership helps us transition from an exploration and mining company into a finished lithium supplying company. And so we're pivoting from that exploration side of things to a development company that's focused on bringing finished products to market and moving further along the value curve in a combination with Iris, with ReElement and Iris's feedstock there. We can sell a higher priced product to market and potentially capture some more margin there as well, while satisfying U.S. demand that currently has no other domestic supply source of note to draw from. So we think that's significant. And then if you layer on the current geopolitical tensions and desire to reshore, onshore, and have some domestic production capability for these essential critical minerals, we're one of the first people that really moves that needle in a significant way. And so we think those are good attributes that are going to reward our shareholders and support as well, and we'll be doing good things in the market from that.
Yeah, from ReElement's perspective, it's working collaboratively upstream and downstream with partners that can really bring solutions quickly to the market, and the Iris relationship really exemplifies that. As we scale our capacity into the projects that I explained, it's collaborating and sourcing material from reliable parties that can feed our facilities, that can produce manufacturing grade products at a cost structure that is sustainable in the market. This isn't just a science experiment or showing proof of concept. We're well beyond that now. It's adding more columns, adding more capacity at our facilities to be able to bring manufacturing grade products at a cost point that makes sense for everybody. And as Kevin said, to re-onshore manufacturing and to secure up our supply chains, not just from an electrified economy, but from a geopolitical and national security standpoint as well. And from where we sit, as that multi-mineral, multi-feedstock platform, is throughout multiple supply chains that we look at, and we have those opportunities to capitalize on.
Oh, this certainly is exciting, and I think huge for the U.S. So really appreciate you explaining that. I do have one more question before we turn to the live Q&A. So this being a completely domestic joint project, how do the benefits from the Inflation Reduction Act come into play?
Yeah, it's there's some big news out on that. I think just this morning here, Janine, the Treasury Department has clarified its rulemaking around eligibility under the 45X tax benefit, production tax credit here. And so upstream mineral extraction if it's combined with downstream production into a finished project, into a finished product, is now become eligible for that tax credit. And so there's a 10% production tax credit for each part of that. So the mineral extraction side and also the conversion side. So that's going to help us here, gives us a more a cost advantage in the market as well. And if being vertically integrated potentially here, assuming we finalize some kind of a commercial relationship here beyond our MOU, it completes that process, whereby delivering finished lithium units to the domestic market, I think becomes more appealing from a IRA, DOE funding support perspective. They're not just delivering raw material to the market, you're delivering a whole holistic supply chain and finished product to market, which is unique and different, and I don't think anybody else is capable of doing that.
Yeah, I mean, from the IRA and 45X on the production tax side, it's huge, right? Linking the upstream to the downstream and the midstream of it puts us in a great opportunity to continue to collaborate upstream with folks because of what our technology brings to the table from a cost standpoint, but from a domestic standpoint too, where we look around and that puts us in a great advantageous position to continue to collaborate upstream with folks to be able to capture that. And we're a big fan of 45X. It's an incentive-based model. You produce it here domestically, you clip 10% rebate on the products, and you have to achieve certain purities, certain qualities of those products to meet it. And our technology does that very efficiently. And when you look at the ReElement platform, especially our powered by ReElement solution, but the platform as a whole, where it's important for the public to understand that ReElement Technologies does not need to be the largest refiner of critical minerals in the world or in the United States or whatever market, but we believe the platform is set up to be the most widely used technology in the world or in the US or in any specific market, which is big from a collaborative standpoint. And if you're talking specifically to 45X or IRA compliance, that's a huge attribute to bring to help shore up and bring efficiencies to partners' flow sheets so they can meet those objectives, not only from a purity product, but from an IRA perspective as well. And then on other programs that are coming out of the Inflation Reduction Act as well, the investment tax credits, those things are a little bit more competitive, where you have to apply from it, but like 48C. But it puts us square in the target as we deploy capital to build these larger scale solution-based refineries, whether they're under our domain or if we do it under a powered by ReElement standpoint, those things can capture a 30% rebate on capital equipment.
Great. All right. So great first part of this segment. We typically have this as a pre-recorded segment for what this means. And as I mentioned in the beginning, this is our first live What This Means segment. So I'm really looking forward to this next part because we're going to be able to take questions from our audience live today. So for our audience, a quick reminder, if you have a question for Mark or Kevin, click the Q&A button at the bottom of your screen, type in your question. I know they both have been looking forward to your questions. We are going to try and limit questions to what brings us here today, and that's the MOU and the agreement between American Resources, ReElement, and IRIS. So gentlemen, we already have quite a few questions that have come in already, so we're going to get started. First question is, have you seen any disruption from the hurricane that hit the Mid-Atlantic last month?
None whatsoever at our site. We're pretty far away from the ocean on our side.
Yeah, I mean, none for us either. I mean, we're based in Indiana. Currently right now we have assets in East Kentucky as well, which also speaks to some of Kevin's points, right? That sit right in the heart of the battery belt, if you will, or that manufacturing base between Michigan and Tennessee, Georgia. we're right in the heart of that. But we haven't seen any disruptions from it. But I think throughout the market, I think on the North Carolina side, we've seen some, there's some high concentration mines in the North Carolina marketplace that probably are going to experience, and I think are experiencing disruptions there. But it's hard for us to comment on those specifically, though. But we've heard some heard some anecdotes that there are some disruptions in that marketplace.
Okay. Next question. I believe GM made an investment into a mine in Thacker Pass. Do you know, is that a permitted mine?
Thacker Pass, I believe, had some approvals, but not sure if it has all of its approvals to ultimately get going. And I think development-wise, processing-wise, it's latter part of this decade, 2029, I think I want to say. So out in the future, beyond the time horizons that we're going to be able to bring product to market in.
Yeah, I think I share those sentiments as well. Kind of what my comments said: big projects, big money, longer time frames, more complexities that go around that one as well. Yeah, and part of that is on the permitting side as well. I think some of them are achieved, but some of them are still to be rectified.
Right. Our next question: how will you compete with China and their history of unethical business practice?
I mean, cost. I mean, that's what it comes down to. It goes to my previous statement on just kind of an overview of what ReElement does. I mean, when you look at the wide and deep moat that China has afforded, it's based off of those things: lack of environmental oversight, lack of social standards, the technology that is legacy that is used in China, solvent-based, chemical-based separation and purification methods. If you're going to run them at large scale, there's massive complexities that come with that, and they do overlook those things. A lot of the acidic wastewater discharge gets dumped out into the environment. Obviously, with labor, they don't have the labor standards that we have, so it's very hard. And then from as you deploy and deploy capital to build those type of facilities, they're not flexible. They require large CapEx investments up front, meaning they're not scalable. You have to build for nameplate capacity and operate at that nameplate capacity for those facilities to be monetized. That's why the refining capacity resides in China, because they don't adhere to the standards that we do. They use a specific type of technology that can really only be deployed in China. And they compete. They've built their moat based off of cost. If you want to compete with them, you have to be able to produce quality product at a competitive cost point. And that's what our technology enables us to do. Directly compete. We know we can compete on quality. We've proven that out, and we know we can compete on cost as well. And that's driven through innovation. And I think that speaks to what the U.S. is really good at. A lot of people sometimes want to throw the towel in on the midstream, but we're sitting here bound, standing on our soapboxes, pounding the table that we have domestic solutions here. And I think this MOU with Iris showcases that really well.
Okay. How are you expecting production when Bleacher doesn't have a preliminary economic assessment or a mineral resource defined?
Sure. So we have a good line of sight on production potential there because it's been mined already, because there's open exposed ore faces around the project. We know that there's a reasonable amount of runway there just from a visual inspection. We now have and we've made the statement that we're currently doing the mineral resource estimate right now. That should be out right around the end of the year or early part of January. That will put more solid numbers around that. But given that this is a brownfields restart, that you can see visual mineralization from prior mining in a number of places, you can make some basic assumptions that there's reasonable runway ahead here for this to operate.
Okay. What do you anticipate your annual scale to be?
Yeah, that's a good question. I think that number is going to follow from our resource statement and a few of the studies we have going on right now. We've said that we're going to have a phase 1 production volume and then followed by a phase 2 production volume in a tiered approach there. So, I would say, not going to go on the hook for a hard number there, but a moderate production to start with, and then scaling to a more significant, globally significant number off the back of that once we have all of the appropriate studies done and completed there. But again, you can walk these sites and you can see the prior mining and production that was done. And so you can have a reasonable amount of confidence that there's reasonable quantities there to start production.
Next question. Iris reported about negotiating of a potential investment by ReElement in Iris. Can you elaborate on that?
I think we put a statement out in our press release around that, and those conversations are ongoing right now, along with a bigger commercial collaboration, how we might do things at commercial scale for the longer term going forward. So those are all happening simultaneously right now.
Great. Yeah. Okay, our next question. If your mine is permitted using ReElement technology, is that a time advantage as well as a technology advantage over sending abroad, as well as a cost advantage? And what would timing be for getting processing started?
Yes, I think the answer is yes to all of those questions. Essentially, if you look at how things are being done now, as Mark said, it's mega dollar conversion plants in China that do this currently. There's been some attempts to do this in Australia without too much success, where you have people that have put billions of dollars into these large, scale production or conversion plants without great results out the other end, and big significant construction timelines. And one of the things that excited us about ReElement is the modular scalability of their approach and their technology to rapidly deploy more units and more capacity here based on market demand, Iris's ability to deliver units to market, those sorts of things. So it's not a build it and hope they come model. We can build it in real time together at significant cost savings than what it takes to build a multi-billion-dollar plant in another jurisdiction. So we're pretty optimistic about that and the opportunities that's going to unlock for us.
Yeah, it's the same thing that attracted us to Iris and their project and team. It's the ability to de-risk, right? It's what the modular scalability, the ability to move more congruently with the market, not having to make massive risky bets day one, meet the needs of the market as it develops. That's in our opinion, that's going to move the needle. And when you're standing up domestic manufacturing of battery cells and EVs and all of these things that are continuing to materialize, you don't want to it just de-risks it further. And when the market moves, when the onshoring of manufacturing and demand increases, the market moves, they're going to go to players that can produce high purity product at a cost point, and that puts us at a significant advantage.
Great. Our next question. What are your thoughts on Tesla's recent stock performance and EV demand for 2025?
Yeah, I think as we speak, the Tesla share price is up almost 20% this morning. So quite bullish. And that's off the back of an increased production forecast for 2025 for more EV demand. So, it's very supportive to all of our efforts here, that there's more demand coming. And I think some of the other automotive folks had some good numbers out as well this week, GM, about growth in EV sales and things like that. So we feel like there's a lot of tailwinds supporting our business here going forward, and that all of these guys have made multi-billion-dollar investments in battery plants in the U.S. that are entirely reliant on imported minerals. So the fact that we can deliver product to market in a domestic context feel like there's good appetite there, and we know that from conversations we've had with potential off takers for our product, that they're eager to get a hold of some of our product and bring it to their local plant.
Yeah, speaking for ReElement, EV is obviously a large driver of energy storage, of rare earth permanent magnets. For us being, again, multi-mineral, multi-feedstock, those are all just good signs. More EV demand is going to drive the market. It's going to drive market demand for critical and rare earth elements. It's going to drive demand for sustainable solutions to recycle these end of life, off warranty, off spec products that don't go in on the front end, as well as coming in off the back end. And that's specifically where ReElement, the value add that we bring. And we always have to remind ourselves. I remind our team internally too, because we're in it up to our eyeballs every day. But what we've accomplished at our Noblesville facility, where again, permitted in a short lead time, we produce ultra pure rare earth elements on a daily basis. We produce ultra pure lithium battery grade carbonate on a daily basis. In a very small footprint, total square footage about 7,000 square foot, with offices and conference rooms and restrooms and a lab, really probably somewhere between 5,000 and 6,000 square feet. Again, I say this, next to people that talk to me on a regular basis are going to laugh, but next to a kid's gymnasium, which is next to a church, I don't think anybody in the world can make those claims of what we're doing. We have to sometimes remind ourselves and pinch ourselves that what we're doing is groundbreaking, and it's that type of innovation that can meet the needs of the market.
Right. All right, we have a question for Kevin. It says, have you seen any other technology that could accomplish what you see from ReElement that can work domestically, either environmentally or economically?
Yeah, that's a good question. We've looked around and have not found anything else that really accomplishes and checks the boxes that ReElement's unique process and IP does. And when you combine the technology, the purity level with the economics and the deployability of that, it ticks a lot of boxes versus alternatives that involve larger dollars, longer timelines, and bigger permitting challenges and things like that. There's some big names out there. If you look at the Albemarles and the SQMs of the world, folks like that are struggling to complete the last mile, so to speak, of converting to battery grade products in a reasonable cost and timeline. And we feel like this is pretty special from the ReElement process, and so we're pleased to be engaging with them further in the conversation.
Right. All right, our final question from our audience. Can you talk about synergies with existing customers and then areas where there are opportunities for new customers thanks to this partnership?
Yeah, I mean, I think that's how this works over, ultimately. Our ability to, and I use this, I say it a lot, our ability to catalyze, synthesize a supply chain is really that strikes to the heart of it. Working with upstream manufacturers of high purity raw materials or enriched concentrated materials, then turning them into manufacturing grade and collaborating with downstream manufacturers and bringing this all together. It goes back to what I said earlier too on the intro. The value proposition of ReElement, but also understanding, we are not all things and everything to the supply chain. We think we solve a very, very complex piece of the puzzle, but we need to do this in a collaborative way. We're not naive to think that we can do this all on our own. So really strong partnerships upstream and downstream is going to be key, and bringing those synergies together is how this is going to work as a whole, as a nation, as a domestic supply chain. We're going to need all hands on deck for this to compete.
Yeah, that's well said. And I guess I would add on to that. We've been looking at the various announcements from either battery makers, cathode makers, automakers, if you put, where they're announced new plans for plants and capacity, and if you put pins in a map where those are, and you look where our project is, where ReElement's project is, there's the map makes a lot of sense for those trade flows, especially when you consider all of the current alternatives are coming from overseas. So in terms of new customers, meeting synergies, it's don't want to sound like a broken record, but it checks a lot of boxes that nobody else does right now.
Excellent. Well, gentlemen, congratulations on the MOU. Really important work that you're planning to do together. Would love to have you back as your relationship and partnership evolves to hear your progress. Want to just say thank you. And this does conclude our Virtual Investor What This Means segment with American Resources, ReElement Technologies, and Iris Metals. I'd like to thank Mark and Kevin for joining us today. I'd also like to thank our audience for your great questions as always. And as a reminder, American Resources trades on NASDAQ under the ticker AREC, and Iris Metals trades on the Australian Stock Exchange under the ticker IR1. And if you like what you saw today, I encourage you to visit AmericanResourcesCorp.com and IrisMetals.com for more information on the companies, to sign up to receive their alerts, as well as follow their social channels to stay current on the latest information. You can also visit virtualinvestorco.com for a replay of today's segment, as well as our latest segments and event calendar. Gentlemen, thank you again so much. Grateful for your time today, and I wish everyone a great rest of your day.
Thank you.
Thanks, Janine. Thanks, everyone.